Thank you very much for creating time to tune in. My name is CPA Joel Kobia, or you may call me Tijo. I'm a strategy and leadership consultant based here in Nairobi, Kenya, and we do this for various businesses that require guidance on leadership, guidance on strategy. I also have a team that does team buildings. We also do corporate training. And corporate training, we do marketing, we do business finance, we do customer service and every other aspects. We have consultants who are able to guide us on all those areas. With regard to my background, I've done Bachelor of Commerce or BCom, what they call BCom from Nairobi University. I've also done CPA, or the Certified Public Accountancy course, and that is CPA, and I happen to be a certified public accountant. Besides that, I've also done a master's in leadership and strategy, or we can call it strategic leadership as well. I started off my consultancy around 6 years ago, and by God's grace and mercy, so much has been happening. So our today's topic, we're asking ourselves the question, how can we assist small businesses to really manage their finances well? And you can't talk about finances without talking about money, because finances is all about money. And when you're looking at small businesses, on most occasions you might find yourself getting this term, SME. SME stands for small and medium enterprises. Others could say small and micro enterprises, depending from which school of thought you come from. And you find on most occasions, when many people are starting their businesses, they start them off as self-employment. In other words, you become the person doing the tendering, you are the one doing the marketing, you are the one doing the customer service, you are the accountant of the business, and you find that you are so many things in one. And if your relationship with money as an entrepreneur is not good, that tells me that that same character in terms of your relationship with money is going to be transferred to your business. In other words, if you're not clean, your business won't be clean. If you're not ethical, your business won't be ethical. If you're not good in personal financial management, then of course your business is going to suffer loss. And so what we always ask entrepreneurs is for you to start off by carrying out your personal SWOT analysis. What do we mean by SWOT analysis? Here you want to look at S standing for strengths, W standing for weakness, O standing for opportunities, and T standing for threats. Again, S, W, O, T. Now, as an entrepreneur, we can talk about how do you manage your finances, or how do you manage any other aspect of your business without you looking at yourself? Because remember, we agreed you're the one who is doing from A to Z of the business. The business solely depends on you from start to end. You are the mother to that business. You are the father to that business. I mean, you are the guardian who is supposed to ensure that everything is running the way it is supposed to be running. So by looking at your SWOT, we're asking ourselves, what are your strengths as an individual? What are your weaknesses? What opportunities can you connect with your strengths? And of course, what can you do about your weaknesses so that they don't become a threat? Looking at your strengths, we're asking ourselves, what are those things that are core? They are working for you. It could be a gift, it could be a talent, it could be a skill, it could be a special ability that you have as an entrepreneur. And this thing has been working so well for you. It could be that you're very good in marketing. It could be that you're very sociable. It could be that you're very forthright in terms of your communications. It could be all those other kind of things. I'm sure you can feel in something there that really states who you are as an individual. Now, having looked at strengths, that is not enough. The next thing that you're supposed to ask yourself is, what do people with strengths like mine do with those strengths? What do entrepreneurs with strengths like mine do with those strengths? Of course, I know in today's topic, we are asking ourselves about the question, how do small businesses manage their finances? And of course, we can't talk about finances without laying a foundation. So these are the kind of things that you're talking about. So once you've identified your strengths, the next thing is identify your weaknesses. What are those things that you're not comfortable about as an entrepreneur? Maybe you're shy, you're not able to market your products. Maybe you're a bit disorganized. Maybe you're a person who keeps on procrastinating. Something that was supposed to have been done today, you're saying, I'm going to do tomorrow, I'm going to do the other day. It could be that weakness is connected to something that you don't have the capacity. Maybe you hated mathematics in your primary school, in your secondary school, and now you're supposed to be the initial accountant for your business. Of course, it's going to be very hard. Why? Because deep down your heart, you know you don't like this thing. They tell us that our minds are subdivided into two. We have the conscious and we also have the subconscious mind. And sometimes you find yourself as an entrepreneur procrastinating on the things that you don't like, those things that you don't have an appetite for. You also find yourself procrastinating on the account of those things that you fear. You don't know how it's supposed to be done. Maybe you're afraid of some failure, and on account of that, you find yourself pushing to tomorrow. Now, what do you do with your strengths? Look for opportunities. How can I tap on my strengths? How can my business benefit from my strengths? How can my business grow to the next level using my strengths? On the other hand, you're also supposed to ask yourself a similar question with regard to your weaknesses. How is my business going to suffer loss on account of my weaknesses? Remember this? Looking at that SWOT analysis, we're asking ourselves, if you don't deal with your threats, with your weaknesses, there's a threat attached to it. So against each of your weaknesses as an entrepreneur, remember you are the A to Z of your business. Write down all your weaknesses, those things that you don't like about you. This is my first weakness, my second weakness, my third weakness, my fourth weakness. Then sit down and carry out what we call in the business world a scenario analysis. And here you can ask yourself, what's the best case scenario if I used all my strengths? What is the worst case scenario if all my weaknesses came to be? And of course, against every weakness, ask yourself, what is the worst case scenario? Worst case scenario is what in the SWOT analysis we called threats. What do I mean? If you don't deal with that weakness, eventually it's going to kick you out of business. It's going to take the customers away from you. And of course, it's not going to be very easy for you to accomplish the kind of things that you really want to accomplish. So I've sat down, I've looked at my strengths, I've sat down, I've looked at my weaknesses, and I'm asking myself scenario questions. How do I make use of my strengths? And of course, how do I work on my weaknesses so that they don't transcend to become my threats? Now, this takes us back to the topic of the day. We're asking ourselves, how do small businesses carry out their financial management? Now, this is an entrepreneur who has already identified financial management as a point of weakness. What do? If you have identified personal financial management or money management or mathematics as a point of weakness, it tells me that from the onset you're going to have issues managing your finances for the organization. Why? Because you don't like it. Why? Because most likely you don't know how it is supposed to be carried out. First things first, how about you looking around you for someone who could be having this know-how? It could be your churchmate, it could be a friend, it could be a neighbor, it could be a colleague, it could be anybody who at least has got some know-how on how business finance is supposed to be carried out. And of course, best case scenario would be for you to go back to school, whereby you can take a very short course that is going to guide you on that. Worst case scenario is whereby you sit down and agree that you're going to do it yourself. Whatever you do, you're going to throw yourself into the deep end and swim until you make it to the shore. The good thing is that as entrepreneurs, we are surrounded by solutions. Some of these things you don't have to pay so much. It can be as easy as 300 shillings per month or even 500 shillings per month, depending on your relationship with that individual. It can also go to 50,000 shillings per month or even 100,000 shillings per month, depending on who you are dealing with. As an entrepreneurship, You can't detach financial management with networking. And here we are saying, look around you, there could be help. In French, they say au secours. Au secours is help. And the moment you talk about it, chances are that solutions are going to come about. So if you're that individual listening to this show or following this show, and to some extent you say you hate mathematics with a passion, and of course you hate business record keeping with a passion, then there's help. You can look for someone who is able to help you. Those who know me, we can connect. I can connect you with someone who can help you on the basics. But in this program, I'll also be talking about the basics. Now, number two, once you've identified whether this is a strength or this is a weakness to you as an entrepreneur, it's really going to help you so much. Now, in business law, we talk about legal entity. What do I mean by legal entity? Every company that has been registered, as long as there are more than 2 individuals in the registration process, that business acquires its own life. If it's a limited liability company, and limited by shares, limited by a guarantee, and all those other kind of things, we call it a legal entity. By legal entity, we mean that organization can be sued, and it can also sue on its own name. But this is a bit different when it comes to sole proprietorship. Sole proprietorship, it could be that you've registered that business, you're the only director, and you've registered it. It's not a limited liability company, you've just done a business name and you're operating using that. Now that ceases to be a legal entity. It does not, you can choose either to convert it to a limited liability company where it has its legal personality. It can be sued or sue under its own name, or it can be whereby you are conjoined with it. Sole proprietorship is all about you being conjoined with it. And so, for sole proprietorship, you might find yourself using your KRA PIN. The PIN that you use as an individual, it can still be the one that you can use for filing taxes for the organization. But as long as it's a legal entity, separate entity in terms of the limited liability companies and so forth, then you find you'll have to get a new KRA PIN for it, because the two of you are separate. Why am I talking about the tax component or the legal personality component? Here, I want to bring about the aspect of you knowing that immediately that you register an organization, everything that you do, you're not the only one who is checking yourself out or watching yourself out. As an individual, as long as the business is not registered, there's so much that you can do, and of course the tax man might not come for your neck. But the moment you have registered that organization, then it's required. It is going to be tracked in the national systems, and of course they're going to know there's this and this organization that is supposed to be doing A, B, C, D, E, F. Now, we are not just doing this for the sake of the government, but you're also asking ourselves, how much do you respect your organization? By respect, I mean that this is a new entity that has been born. This is a new vehicle, and it's supposed to be carrying out a specific purpose. I want to believe by the time that you came up with the organization, you already had a business idea. You had a very good concept. This and this is what you wanted that organization to achieve. Now, you can't start off an organization or a business without you thinking through it. You start with the end in mind. Eventually, in as much as I'm starting this organization, what are those things that I want these organizations to do? What is the purpose that I want this organization to serve? And of course, that is what we call starting with the end in mind. And so as I start off my business, these are the products that I want to be selling, or these are the services that I want to be offering. And the moment you've made up your mind, these are the products that I'm supposed to be offering, or these are the services that I'm supposed to be providing, then the next thing is for you to think about capital. Do I require capital? How much is required in order for me to get started? Now, some of us might tell ourselves, yes, I've sat down, I've come up with a listing of the things that I'm supposed to be selling. I've sat down, I've come up with the things that I'm supposed to be doing in terms of the service delivery. I've come up with my assets or the equipments that are required for me to do the kind of business that I want to do. Now, the next thing is for you to write down all those things and make sure that Against every item, there is a financial figure. There's a financial component that has been attached to it. If you're running a salon, we have several things that are required in the salon. How about you listing all of them down? If you're doing merchandising, you're selling bread or milk or all these other kind of things that are movable, the products as well, you also need to list them down. And of course, identify exactly what do I want to be selling. Now, after coming up with the product or with the service and the equipment that is required for you to offer that service, then you'll be at the start point. And this is the point whereby we talk about capital. Now, capital is the money that you require in order for you to get started. It could be money for that building in terms of the rent. It could be money that is required for you to buy those equipment. It could be money that is required for you to hire that extra staff that you need to work with. It could be money that is required for you to acquire those products that you need to be acquiring. Now, we said that you need to start with the end in mind. And here, you are thinking from the end to the start. You are thinking from end to end. And here you're asking yourself, I'm starting a salon or I'm starting a barber shop. What are those things that I'm supposed to be using in order for me to deliver this service? And of course, you don't need capital for all businesses. If you're getting into a business like MCing, for example, all that you need is your gifts, your talents, your special abilities. If you're getting into a business like consultancy, on most occasions, it's not a must to start with an office, because most of the assignments are carried out there. All that you require is the skill that is supposed to be. And of course, maybe some bit of dress code to ensure that you're dressed properly for the occasion. They tell us that people address you the way you are dressed. So as an entrepreneur, you've sat down, you've come up with a list of the equipment that you need and all those other pre-incorporation expenses. Pre-incorporation, we mean all the costs that are required in order for the business to be registered and of course for you to be in place. Now, one of the things that you really need to note, it's good for you to adopt what I call 5 R's. In my second book, it's called Go for Gold, The Art of Asking Right. I give guidance on how to do goal setting. And of course, the first R is record. The second R is review. The third R is realize. The fourth R is reward. And the fifth R is repeat. For this episode, I might maybe talk about only 2 R's, the first 2 R's. And what do I mean by these R's? The first one is record. Now, as a good entrepreneur, if you want to succeed in all these things that we are talking about, you must become a friend of a book and a friend of a pen. If you don't like writing on a paper and a pen, then the next thing is maybe look for a laptop or your phone. You can download an application called Excel or Microsoft Word. That can be a very good start point so that all these expenses that you're using to start off your business, you are supposed to be writing them down. If you've picked some money and bought some equipment, it's good for you to record on that very day. So on the first column, indicate the date. The second column, you can call it particulars or the details. And here you're saying, I've bought a shaver, or I've bought the dryer for the people doing salon, or I've bought 15 cartons of water or 15 crates of soda, something of the sort, so that from the onset, you are getting it right in terms of recording. Remember, you also came up with a budget, indicating these are the things that I would like to buy. And I'm going to buy all these things, and we agreed that under every item you're going to indicate the financial component. How much is this and that going to cost me? So you started off by recording in terms of your budget, and now every single day, upon buying this one, you want to record this one bought, and you go back to your budget, tick, done. You're buying this other one, go to the budget, tick, done. So that eventually you want to make sure that you've recorded every single thing. Now, one more thing I didn't say about the budget. You're supposed to look at that budget and come up with what you call prioritization listing. Most of us, even at the personal level, we do very well by coming up with budgets. But the next thing is go back to that budget, and you find this in my third book about personal financial management. And here you want to really check all those items. Which one do I give priority. In Swahili, they call it kipaumbele. Which one are you giving priority? So I'm going to start with this, then go to this, then go to this. After that, I spend on this. After that, I spend on this. You don't go to item number 20 before you finish item number 1 or item number 2. What am I saying? All that we mean is that every single thing that comes into your business should be something that you've given a priority. You don't want to buy things that require other things in order for you to operate them. You want to make sure that everything that you're getting from the onset, it is helping you to get that money back. So you've started by doing your budget, you've done the prioritization listing, going back to the budget and knowing which one comes first. And of course, which one do you cluster with another? For example, if you're starting a business of kinyozi, you need that machine maybe, and maybe you need some extension cable, maybe you need a mirror. So you can't say a mirror is going to be priority number 20. It could be one of the top few priorities. But if you're thinking about a massage parlor in your kinyozi, you can't have that before getting the mirror or before getting the machine. It's good for you to have your priorities right. So after that, I'm doing my recording. After I bought this, I've recorded, bought this, I've recorded, bought this, I've recorded. Now, when it comes to recording, you don't record the following day or after a week or after 2 weeks. You make sure that you're recording that very day. No matter how tired you are, make sure that you've kept your records right. Most of us tell ourselves that I'm going to trust my memory. I know I'm going to remember, or I feel a bit tired, I'm fatigued. I think I can do it tomorrow. The moment you push to tomorrow, of course, there is a lower probability that you're going to capture it 100%. So how about you working as hard as possible to make sure that you are hitting the rod while it's still hot? Sometimes you find this so much that you have got to record, and it's at that point that many people give up. Why? Because at the nick of point, within 5 minutes or within 1 hour, you should have done the record keeping so that you don't have so much accumulating. I hope up to that point in time, we are all set when it comes to how do I start off my business record keeping. In a short while, I want us to ask ourselves, now, how do I go about all those other aspects of my business? Now, you can't talk about money, or you can't talk about finances without talking about money. What is money? Money is a measure of wealth. Money is a store of wealth. Money is a medium of exchange. Sometimes you even say money is what you're paid for those in employment in exchange of your time, in exchange of your breath. So money is a medium of exchange, is a store of wealth, is a measure of value, among other things. In other words, how you deal with money is going to define whether your business is going to grow or stagnate. It's going to tell us whether things are going to be good or bad. And of course, every single decision that you make on money has what we call a ripple effect. In other words, if you threw a small speck of stone or a small stone, you threw it in a steel dam, somehow it's going to cause some ripples. Now, every single decision that you make in your business touching on money, it's also going to have a ripple effect. You want your business to grow as fast as possible, but you find on account of our poor relationship with money, then the businesses don't grow. Now, one of the biggest causes of all this is that we don't know how to separate personal money from business money. You find someone is running a kiosk. They've sold some unga, some soda, and all these other kind of things. And at the end of the day, they find themselves with 2,000 shillings. And you find someone saying that 2,000 is the profit that I've made that day. My brother, my sister, you're very wrong. The money that you've made from your sales, we call it sales. Now, sales is different from markup. Sales is different from margin. Sale is different from profit. I've even found some Christians who are very staunch, God-fearing, going to the bank so that they can get some loan, maybe to add to boost their capital or to buy some equipment for their business. Someone needs a camera. Maybe they want to start a shooting, video recording business, and they're going to get a very nice camera at around 200,000 shillings. They go to the bank, get the loan of 200,000 shillings, and you find someone is tithing 10%. and the camera is 200,000, you got a loan of exactly 200,000, and someone is tithing 20,000 shillings. That's 10% of 200,000. For that I say you're not wise, you're otherwise. Why? Tithe should be made out of your increase from your business, not out of your capital. Someone wants to buy a matatu. They've gotten a loan of 1.8 million, call it 2 million, and they want to tithe 200,000 shillings. That is not your money. You don't have a right of tithing on what is not yours. So I don't tithe on loan, but I tithe on the increase. I invest that loan, whatever I'm going to get out of it, then that is what I'm supposed to bring to the storehouse of God, for those of us who believe in matters to do with tithing. So I've sat down, I've come up with my budget, and of course this time around I'm making sure that I'm separating business money from my money. And I really want to understand the difference between sales and profit. So how do I do this? Now, this depends on the sector that you're in. It depends on the business that you're running. One of the first things that you're supposed to do as an entrepreneur is for you to know how much margin are you going to make or markup are you going to have on the various products. For example, I'm buying a bale of unga for my retail shop. Now, I'm able to tell that I've bought this one at maybe 2,000 shillings. I'm going to do a markup of 10%, and maybe I'm going to sell each at a 10% higher. That means 20 shillings probably is what I'm going to be making per packet, or 5 shillings is what I'm going to be making per packet. So I'm supposed to record somewhere in my notes that for unga, if I sell 2 kg packet of unga, I'm making 10 shillings or I'm making 5 shillings. If I sell 10 packets of milk, 10 packets of milk, each packet I'm making 3 shillings or I'm making 5 shillings. If I'm selling pencils, for every single pencil I sell of this type, I'm making 2 shillings, like that. If it's bulbs, this type I'm selling at this much, I'm making this much. So that every so often, it can be on a Saturday or on a Friday evening, you can do what we call stock take. And by stock take, I really want to find out how many of these units have I sold? How many of these units have I sold? Now, for the fast moving products like milk, you might find yourself doing that on a daily basis. You started off with 20 cartons or 15 crates of milk, and you want to find out at the end of the day how much have I sold. Now, once you've done that, as an entrepreneur, you can do your quick maths, whereby you know I've sold 1 crate of milk, or 1 crate or 1 packet of water, and each I was making 5 shillings. So at the end of the day, you're able to tell, today I've made a profit of this much, I've made a profit of this much. And most of us end up destroying their businesses because we don't separate sales from the profit. So I find myself in my till or in my cash box with 15,000 shillings or with 5,000 shillings at the end of that day. I really want to find out, what did I sell? And one of the great things that I'm supposed to be doing as an entrepreneur is to identify my stock reorder levels. That is for those who are doing products, selling maybe in a kiosk or such kind of a thing. You want to find out, what is my reorder level? I know I sell 20 packets of milk a day, or I sell 50 packets of milk a day. So the records that you are keeping is not just for telling me how much I've made in terms of profit, but these records are also supposed to help me to know my reorder level. One of the worst things that you can do as an entrepreneur is to give your competition an order. Buy some products that are supposed to be stocked in your shop. You are not just going to look at the cost in terms of the purchase cost of that particular product, but you also want to consider the transport component. Maybe you're in a business that requires you to do a lot of communication, to call several customers to your salon or to your kinyozi, or even to do some social media advertisement. You also want to take that into consideration when you're doing your profitability. So it's not just about me selling that product and I tell myself, this is what I've made and this is what belongs to me, but you also want to find out, what are the other costs associated with this product or with this business, either directly or indirectly. So yes, I found myself with 10,000 shillings at the end of the week. That does not tell me that the 20% or the 10%, the margin that I've been making, the 1,000 is what I've made in terms of profit, I really also want to ask myself other questions. Are there any associated costs that came to be so that I can make this money? And you find, yes, you are the only employee of that organization, so you need to pay yourself as well. What percentage are you going to pay yourself out of that? There is rent that is supposed to be paid for that premise or premises. That is if it does not belong to you. There is the water, maybe. There is the electricity that is supposed to be paid. And it's at that point in time that you now want to start to come up with ways and means of making sure that you are appropriating or you are allocating monies to these other expenditure items. So with every sale, I want to make sure that I'm keeping some bit of money aside for rent, some bit of money for water, some bit of money for electricity, and some bit of money for all these other kind of things. The moment I do that, at the end of the month, I'm going to be able to foot my bills in terms of the overheads. Now, on most occasions when you are starting, you find the rent is going to be given priority as compared to you paying yourself first. So it's not a must that you demand, I must pay myself first. After all, I'm the one who is doing so much. Remember, there are other competing interests for that money of yours. Now, it's at this point in time that you'll find out that, especially for those who are starting business, it might be very hard for the business to do what is called break even. What do I mean by break even? By break even, I mean the business is able to pay for all its costs, both the direct costs of maybe buying that product and doing all those kind of things that you are selling to the market, and it's also able to take care of itself in terms of the premises, in terms of the rent, in terms of the electricity, in terms of the communication, in terms of security, in case there are some of these kind of things that are supposed to be done. So it's at this point in time that you want to come up with a list of something that is called pre-incorporation expenses. Now, pre-incorporation expenses, these are the mega costs that you've incurred, which you cannot recover within the first month or the second month or the third month. And you find some of these, depending on the business that you're running, they might be recovered within 1 year, or they might be recovered within 2 years. For example, you're doing juice business. And of course, there's a machine that you're supposed to buy for juice processing. And this thing has costed you 20,000 shillings or 40,000 or even 100,000 shillings. Now, you don't say that I'm first of all going to recover the cost of this before I start paying myself. There's something that we call amortization. Amortization is whereby you tell yourself the cost of this particular thing that I've bought, I'm going to spread it over a time of 5 years, over a time of 10 years. And it's at this point in time we want to talk about depreciation. I hope I'm not giving you so much. Now, in terms of depreciation, you are telling yourself that for this vehicle that I bought for this business, I'm not going to push myself to pay for it in totality within 1 year. I can spread the costs from my business to have paid it within 5 years or to have paid it within 10 years. There are things that we call fixtures and fittings. Maybe in that building of yours, there are some few things that you had to change. There are some grills that you're supposed to have put in your business so that you can increase on the security. Or maybe there are some shelves that you had to do. There's some painting that you had to do so that the business can look the way it's supposed to be looking. You can't push yourself to recover all these things within just 1 month or 2 months. Some of these things you might give yourself 3 years or 2 years so that at least you're also able to have a leeway of ensuring that you've started benefiting from the business. Now, once you've looked at what we call the fixed cost, you've looked at the pre-incorporation expenses. Fixed cost, we are looking at those things that you have got to pay an exact amount every single month. For example, rent. For example, electricity has to be paid every single month. It can be water, and you are 100% sure these are supposed to be paid every single month. I can have a page for that, so that come rain, come sunshine, as I allocate my monies, I'm supposed to know, hey, I'm supposed to think about rent. Hey, I'm supposed to think about electricity. Hey, I'm supposed to be thinking about water. So for the page on fixed expenses, I know that one is intact. At the end of every month, I need at least 15,000. I need at least 20,000. I need at least 30,000, depending on the business. Now, if you look at how much is coming in terms of the sales or in terms of the income, it's able to tell you whether you are able to take care of the fixed. Fixed, remember, they are not variable. They don't change. Rent is rent. Water is water. Electricity is electricity. And of course, without the rent, you can't do the business. Without the water, maybe you can't do the business. Without the electricity, maybe you can't do the business. Without the communication, for those who are doing Uber, without you having a good gadget or phone, or without you getting the data bundles, you can't do the business. So you want to make sure that the fixed costs are well taken care of at the end of every month. Now, once you've looked at the fixed cost, there's another list of items that we call the variable expenses. Now, these ones keep changing. For example, transport. It's not a must that transport is fixed. It could be any other thing that keeps on varying. That means at the end of every month, it's hard for you to really predict this is the much that I'll have spent on this component. Now, at that point in time, when you're coming up with your budget for the next month, you can just put maybe 75%. You can look at how much you spent this month and budget 75% of that, or even 50%, depending on how that month was. So you look at your fixed costs, the ones that don't change. You also look at your variable costs, the ones that keep fluctuating. Once you've added the two, you get what is called the total cost of the business. Now, total cost of the business, what does it mean? Total cost of the business means at the end of every single month, the business is supposed to be giving me at least money to pay for the fixed cost and money to pay for the variable cost. At that point in time, I'll say the business is self-sustaining. That means the income that is coming is able to take care of the expenses. Now, if the much that is coming in terms of the income, I've gotten maybe 30,000 shillings, and I'm looking at the variable cost and the fixed cost, this one is coming to 50, it tells me that I'm required to pay 50 at the end of every month, whereas the business is only giving me 30,000 shillings. So 50,000 going out, 30,000 comes me in, that tells me there's a red flag that I'm supposed to be thinking about the 20,000 shillings. Now, the 20,000 shillings, where is it going to come from? Now, these are some of the bad or poor decisions that entrepreneurs make. You're supposed to spend 50,000 shillings every month, only 20,000 shillings a month, or not, 30,000 shillings is only coming at the end of every month. And every single month, you have a deficit of 20,000 shillings. Now, this tells me something. It tells me that I need to think about the second R. Remember I talked to you about the 5 R's? The first one was record keeping. So I'm recording my fixed cost, I'm recording my variable costs, that is the total cost or total expenses for the business. On this other side, I'm recording every income that is coming. If I'm well detailed, I'm also able to pick how many products of this and that I've sold so that I'm able to look at my stock levels. Now, having looked at 50,000 is going out, and this other side, I'm seeing that only 30,000 shillings is coming in. It tells me something. I've got a deficit of 20,000 shillings that I'm supposed to look for. Now, of course, Kiswahili, they say kizungumkuti. That's where the rain starts beating you as an entrepreneur. Why? Because 20,000 is required every single month. Where do you go for this money? Some people go to Shylocks, others go to their friends, others go to financial institutions so that this gap can be gotten. Others go to several other places. It doesn't matter where you're going to get the money, but at that point in time, you really want the money and you are ready to get it at whatever cost. I've sat with so many entrepreneurs who went to Shylocks. Shylock is not just an individual giving you money at a very high interest rate. Shylock could be you going to some of these financial institutions, you tell them that you need money, they tell you sign here, and you've not read the small print. You've not known exactly what the terms and conditions are. And so many have come to me crying and telling me, oh, the interest is much more than the principal. I borrowed only 50,000 shillings. They are now asking me to pay 120. That is the 50 plus another 70 on top. Some of these places that you go to borrow money as entrepreneurs, you find the interest rate is very, very high. So before you go to look for a place whereby you're going to get the extra 20,000 shillings, remember, you're now just looking for 20,000 this month, and most likely next month you might be forced to look for another 20. And you find this entrepreneur might have started the business on a wrong footing. So when you're talking about capital, we're not just looking about what was required for you to buy the stock or to paint the building, but you're also looking at something that we call the working capital. Now, every single entrepreneur, if they don't understand the concept of working capital, then it becomes very hard for them to make it in life. Why am I saying this? You find in that kiosk of yours, in that salon of yours, in that Uber business of yours, not all customers are going to pay you cash. There could be a few that are going to encourage you to give them credit. That means they are going to pick your products, but for one reason or the other, they are not going to pay today. Some might say, I'm going to pay after 30 days. Others might say, please give me 2 months. Others might say, I'm going to pay tomorrow, but 3 weeks down the line, they've not yet paid. So if these individuals have taken these services or these products on credit, and they're not able to pay you, and you didn't have what you call in the accountancy world buffer, it means that you're not going to be able to restock. It tells me that there are several fixed costs and variable costs that you're not going to be able to take care of. So as you think about the capital that is required for you to start your business, think about the things that you're supposed to buy in terms of the stock and all those other kind of things, the painting and the reinforcement, coming up with the shelves. That's very, very critical. But you also need to think about working capital. And here, we say that it's good for you to start with the end in mind. You're asking yourself, if 20 people or 30 people came to me and bought on credit, these are individuals who are credit worthy. In other words, I've tried and tested them, I understand their character. Some other time we can talk about the 4 C's of lending. And of course, once you've seen all these in terms of their capacity, in terms of their character, in terms of all these other kind of things, then you can tell yourself, I can give them on credit and I know it's going to be paid at the end of the month. Now, some of the people that you sell things on credit, you might find yourself adding a little markup on top. Instead of selling to them at 5 shillings, because they're getting on credit, you can agree, I'm going to sell at 6 shillings or at 7 shillings. Some of them are going to be unacceptable. Why am I having a markup for these individuals who are buying on credit? It can be an extra 50 shillings or an extra 100 shillings. I'm doing this because now that they've gotten this stock on credit, all that is telling me is that I'm not going to be able to access that money when I need it. It tells me that I'm forced probably to go to some financial institution or to go to some other person out there, creditor, who is able to give me this money in order for me to close the gap that I was not able to close, simply because I gave you my goods on credit. The other thing, there's something that we call in the accountancy world time value for money. And of course, the value of a shilling today is not the same as the value of a shilling tomorrow. Because the moment I sleep with that shilling today, there's so much that I can do with it. I don't mean literally sleeping with it, but the moment I have it within my coffers or within my cash till, there's so much that I can do with that money. So you can consider some few individuals on credit. However, these individuals are going to pay a small premium on account of that. It can be something that is very negligible, but from your end, it's going to add some bit of value. Now, when I'm starting my business, I need to be taking care of such kind of people into consideration. And for that reason, I'm not just going to have 100,000 shillings for my starting capital. I'm also going to call myself into a meeting for at least 25% extra for what you call working capital. Working capital comes in to help you as a business person to come and shelter you from any shocks that might come about in your business. Here you're saying someone picked on credit and for one reason they were not able to pay. It could be that your customers have been demanding for a product and you've gotten a very good supplier who can sell you these products at a very negotiable fee. You don't tell yourself, I'm not going to get it, because these individuals are asking for it asking for this product on a daily basis. You can't say that I don't have it. So the thing that is going to happen, tapping on your working capital, you're able to get this extra product, and these are the extra product. You had not budgeted for it. You had not budgeted for it from the onset, but now that the demand is coming from your customers, there's a need for you to go out there and think about it. So we are talking about working capital. And of course, there could be one or two other emergencies that are coming in. You had budgeted 1,000 for electricity, 200 shillings for water, but something has happened and you're not able to spend exactly the 1,000. Maybe you spent 1,500 on account of ABCD that happens. What happens? That buffer or the working capital is going to come in handy for you. Now, when it comes to you looking for sources of this extra funding, it's good for you to have a list of individuals that you can go for. Don't be so much in a hurry to go for Shylocks. Don't be so much in a hurry to go to microfinances or to banks. First and foremost, employ what you call networking. Have friends within your circle that are able to give you this money at zero. It could be friends or associates that you're doing the same business with, and you can come up with a credit agreement that in case you're in need of 1,000 shillings or 2,000 shillings, I can throw it to you at any given point in time. And when they're also in need of 1,000 shillings, 10,000, 5,000, depending on how much you'll have agreed, the same can be shared. Now, at this point in time, you're not paying a coin extra. You're only giving them exactly what they gave you. Why? Because next time they're also going to ask and you're going to give it to them. That is the first priority when it comes to looking for the working capital or the extra source of funding. People are going to give it to you for free. Now, most of us don't think about the working capital when they are starting their businesses, and at that point in time, because they didn't think about it, at the very point in time when it is required, it becomes an emergency. And of course, when it's an emergency, you are ready to pay for anything so that you can get that money. That's when people go for mobile lending. Some of these platforms look cheap, but they're very expensive. They might charge you 9%. You take 10,000 shillings, you pay 10%, or you pay 9-point-something%. And of course, they don't look at the duration. Most of these mobile applications, they don't look for the duration. If you've borrowed for 1 month or 1 day or 1 week, it is irrespective. You're going to pay the same as the one who picked for exactly 1 month. So I always tell business persons, please keep off mobile lending. I don't want to name the names, you know them. When you go to your Safaricom app, there are so many of them that are advertising every so often. Please avoid that at the highest point possible. The other cheap source of funds can be SACCO. Now, where do you take your money every single day? We always advise entrepreneurs, ensure that you bank your money on a daily basis. The money that you've made today, make sure that you've banked it on M-Pesa. Make sure that you've banked it in your bank. In as much as you'll be requiring it tomorrow morning, please ensure that you can bank it. Someone is asking me, why should I bank and I know I'm going to withdraw it tomorrow? Am I not going to incur extra costs? Of course, you're going to incur extra costs. But that day that you'll be needing extra funding for working capital from the bank or from a microfinance or from your SACCO, most likely they're going to ask you, give me your banking statement for the business. Give me how much you've been banking per day. And of course, in my past life, I served as a banker for around 9.5 years, and I served in the line of credit. I've given loans of up to even 20 million, 30 million, 40 million, 50 million. And one of the things that we required as bankers, because I'm now no longer a banker, I advise banks and microfinances and SACCOs. One of the things that is required is for you to show that you've got the capacity to pay. You might be selling 100,000 shillings a day. You might be selling 2,000 shillings a day. You might be making from that Uber business of yours 5,000 a day. Why not? Before you send that money to the owner of the car, why not bank it first to your account? Why not first of all bank it to your M-Pesa? So that that day that you'll be requiring to buy your vehicle, in case the bank requires you to give them a bank statement, you're going to give them a bank statement indicating the gross that has been coming up. On most occasions, It's very hard for the banker to differentiate what percentage is profit, what percentage is sales. All they want to look at is what we call the turnovers, how much is coming in on a daily basis. So please ensure that you make sure that you bank. That is, if you want to boost your organization in terms of the working capital. Now, SACCOs have got business development loans or development loans for your business. Banks also fund you for working capital. On most occasions, I don't think there's a bank that you'll go to in this nation and beyond that is going to give you money for startup. You want to start a business, you've got a very good concept, and you want them to give you 2 million or 20 million. The banks are risk averse. They want to make sure that their money is not going to be subjected to risk. So they want to ask themselves, do you have the capacity? Do you have the experience of running such kind of a business? And so if you prove to them that indeed you're able to run such kind of a business, they're going to give you that kind of money. But it can only be if you have been banking and that there's a record to indicate how much has been coming in. The other thing that financial institutions are going to be asking for is your daily record keeping. Show us in that Uber business of yours how much has been coming in on a daily basis. The moment you're able to keep your records right, then it's going to be very, very good. Remember we talked about the second R. Second R stands for review. Come up with a way of reviewing your business. Are you doing the things that you told yourself to do? If you don't have a partner that you're running this business with, how about you calling yourself to a meeting every single week so that you're able to evaluate how well am I doing as an entrepreneur? This is what I set myself to do. Am I really doing the things that I told myself to do? There's so much that we can talk or have a discussion with regard to this topic. But I want to believe that this is not just the end of it. There's so much more that we're going to be talking in the episodes to come. God bless you and God do you well. My name is Joel Kobia, Tijo, Strategy and Leadership Consultant. Talk to me for any matters to do with your business on how you can upgrade it to the next level. Thank you.